Hello, everyone, and thank you for taking the time to review the Morgan Hill real estate market analysis for October of 2008. My name is Robert Whitelaw, and I'm a licensed real estate broker in the state of California. I'm also a member of the National Association of Realtors and a certified ePro. And this presentation is sponsored by my company, Whitelaw & Sons Real Estate Services, serving all of Silicon Valley. Now let's go ahead and jump right into the supply and demand numbers. And of course, as we always do, we're going to be looking at these numbers in going back years now. So this is all the month of October, going all the way back to 1999. You can see we've had a pretty steady increase. It's been a regular increase, really, since 2006. We got a big jump between 2005 and 2006, but it's been relatively steady. Now, a lot of this it doesn't reflect the fact that we had a little bit of a situation earlier this year before we had our little meltdown in the economy, where we were starting to see things get a little bit better. Things were starting to stabilize. Inventory numbers weren't rising at the rates previously, so it wasn't so much that we were seeing inventories going down, but we were seeing the rate at which inventory increased slowing dramatically. So what basically has happened is it looks like the reset button has been pushed on sort of the slowdown in the slowdown that we were seeing, and this downturn has really just sort of put us right back on steady bad news, and I don't want to overemphasize that, just simply because it basically put us back where we were. What I look at this downturn as is a big delay in the amount of time it's going to take us to get the overall markets turned around. Now, in most recent news, we know we were finally officially have been in a recession. A lot of us have sort of known that, and I think it's always convenient that they don't know for sure you're in a recession until certain criteria are met, and by the time you meet that criteria, you've been in a recession for a year. Now, since recessions tend to last about 18 months, that makes it very convenient to say that we'll come out in 6 months. I'm not sure we'll see us living up to the average this time. It may be going longer, but I think what we have seen here is definitely at least a 6 month to a year delay in the kind of recovery we were already starting to see about the middle of this year. All right, so let's go ahead and look at these numbers and see where we stood in comparison to last year. In the month of October, inventory is actually up 8.7% from last year. That's 26 more homes in the inventory in Morgan Hill than were in the inventory in October of 2007. That gives us a grand total of 325 homes currently on the market in Morgan Hill. Now, if we go ahead and look at the homes that were listed in the month of October, that's relatively good news. A slowing in this number is always good because it helps to contribute to lower inventory numbers in the coming months. And as you can see, it's actually down. If we compare October of 2007 to October of 2008, we can see that the total number of homes listed is down by 35%. That's 35 fewer homes listed in October of 2008 than in 2007, so that's very good news. And that gave us a grand total of 65 homes that were listed in October. We'd love to see that number go even lower. Historically, it has been lower, but we're actually at about a healthy rate of new listings for the month of October, to be frank. I wouldn't mind seeing us just sustain this number. It's also good news because we're not seeing dramatic increases in listings that might be caused by foreclosures and those sorts of things. So that's actually a good sign. Now let's go ahead and take a look at the homes that have sold. We've also got good news in October for the number of homes sold. As you can see, compared to last year, we're definitely up. It's up 47.6% from the same time last year. That's a net increase of 8 homes. So 8 more homes were sold in the month of October than were sold in the month of October of 2007. And that gave us a total number of homes sold of 25. So that's good news. If we can keep those homes listed and number of homes sold numbers up, we're going to slowly chew away at those inventory numbers, and that's always a good thing. Now, as I always like to do, I want to give you sort of a perspective. I like to use the ratio of the total inventory to the total number of homes sold to sort of give us a guideline on how many homes how long would it take us to sell off the entire inventory we have now if sold's numbers stayed the same. But it also sort of tells us the competition that sellers are feeling out there. Now, if you do the math, it ends up that we have this month. That means that if the inventory numbers and the sold numbers were to stay as they are right now, it would take us 13 months to sell off the entire inventory in Morgan Hill. Another way of thinking of that number is that for every home that sells, there are about 13 homes out there that are trying to get sold. So definitely, it's the same story we've talked about before. Sellers have a huge amount of competition out there trying to get the attention of buyers, and none of that has really changed. And I suspect that situation will actually just get a little bit tougher as we head into the winter months. Now, the ratio was 10.22. So we've seen a very dramatic increase in that number from 10.22 up to 13. Last month it was about a little over 10 months worth of inventory. And even more depressing, I guess you could say, with these numbers is that the county average was 6.4 last month. So for the entire Santa Clara County, we had about 6.4 homes in the market for every one that sold, or we had about 6.5 months worth of inventory. So not great. Morgan Hill's always sort of performed worse than the county in general, and we've been stuck in a market like this for quite some time. So this is nothing new to a lot of folks who are specifically interested in Morgan Hill. This shouldn't be a lot of brand new information for you. Now let's go ahead and take a look at the same data, but for previous months. Now, one reason I like to present this data is so that we can compare it to where it was last year and not just look at the number just for the month of October, but sort of see what led up to it and where it went from there. Now, if you look between September and October, you can see that the inventory numbers actually are up 2.52%. That's about 8 more homes list. But let's go back and look at October of 2007 and see that we're really sticking with what has historically been the case. Last year, inventory numbers actually increased by quite a bit more than they did this year. We are overall higher in these numbers, but the increase amount from September, October was less. Is less this year than it was last year. So we're kind of falling in with what we would expect if we use last year as a model. Now, what's interesting about that is a lot of other communities are not seeing this. A lot of other communities are seeing that the downturn in the market really had a sort of history-changing effect on how the market performed. Now, and we didn't see that as much. Maybe it was because we were already sort of down in Morgan Hill, and really more bad news couldn't make it any worse. I guess that's a pessimistic way to describe the situation, or maybe it's finding the most optimism in a bad situation as possible. But what's interesting is that unlike other communities, it didn't affect it as much here in Morgan Hill. Now, if we look at last year in October as a guideline in the months to come, we should see a decrease in the inventory. Now, that would be normal. We would expect decreases in the winter months. As folks head into Thanksgiving and Christmas and these other times, we would normally expect inventory to go down. What will be interesting to see is whether or not the foreclosure situation has an effect on this. Now, I know that some lenders have put a moratorium on foreclosing in November and December, so that may artificially give us numbers that we would expect. In other words, decreases in the total inventory. But what that might end up giving us is a artificial boost in the number of foreclosures in January that might shock some folks. So if you're not aware that there's been a moratorium put on for some folks on foreclosures for November, December, it could skew these numbers a little bit. So we need to keep that in mind as we move forward. Now let's go ahead and take a look at the listed homes numbers. Now you can see again that it is down from the same time, or from September to October. It's actually down 16.67%. That's 13 fewer homes listed in October than in September. If we look at last year, we can see that October actually saw an increase in listed homes last year. And that was actually a little bit uncharacteristic. We usually don't see quite so many increased homes listed in October, at least if you go back to 2006 and 2005. So last year was a little bit strange. We usually expect to see a decrease. From October moving forward, last year we did see decreases in November, December. My guess is that we will also continue to see that same trend this year. Now let's go ahead and take a look at the homes that are sold. Homes sold is actually down a little bit. That's to be expected when we get out of the summer months. We usually see a little bit of a dip. Last year we tended to see the same thing. In fact, we saw our dip come early last year. We got a very short summer season in Morgan Hill last year that really wasn't that spectacular. Moving forward, I actually have a feeling that we might see flat or even a little bit of an increase in sales compared to previous years, simply because there are a lot of folks out there looking to take advantage of the down market. I know I have 2 clients myself that are in that boat. We're seeing a lot of action on some of the lower end homes, but we're also starting to see some buyers realizing that homes that were listed for $2.2 million last year are now down to 1.2 and 1.4. Some of folks who are capable of purchasing at that price range are seeing those as some great deals and are coming out to take advantage of them. Now, the sales are down 16.67%, and that's a total net change of 13. So 13 fewer homes sold in the month of October than the month of September. All right, let's go ahead and take a look at the home prices. What we'll look first here is the average price. And the average price for a home actually dipped 17.98% from the same time last year. And as I've said, this isn't news to folks in Morgan Hill. We've had our prices dropping since 2006. This is a little bit more of a pronounced drop than we saw between 2006 and 2007. I think a lot of this influence has to do with the very first ripples of the downturn in the market that we saw. Now, the average home price was $780,040. That's a total change, dollar amount change from the same time last year of $170,989. So a pretty substantial drop in the average price. Now remember, this is just for the homes that are selling. So it shows us more an emphasis on where the money's being spent really than anywhere else. And we'll see a little bit more of that as we move forward into the median price numbers, which are also interesting. Now the median price was $700,000. And that is also a pretty substantial change and really shows us that the median, as you all know, means that that's basically the middle point of the number of homes sold. So if we sold 100 homes, 100 of them were priced over the median, and 50 of them were priced over the median, and 50 were priced below the median. This basically tells us that the emphasis really has been placed on lower priced homes. We see a lot of action on homes priced under $500,000, $550,000, $500,000, as folks come out to really take advantage of those deals. Now, the median price change was 20.9% for a dollar amount change of negative $185,000. Now, in the month of October, the highest priced home was on Pear Drive, and that sold for $1,525,000. That was listed for $1,650,000, but was actually a renewed listing. It had previously been listed for $1,995,000, and the total days on the market was 5. The more realistic number is quite a bit longer than that. It was on the market for quite a bit longer than 5 days, but was taken off the market for about a month and then relisted. Now, the lowest priced home was on Bender Circle. That sold for $390,000. Actually, that was higher than list price. List price was $388,550, and that had a total days in market of 6. Now, that was real estate owned by a bank, so that was a foreclosure property. And here's something that's really amazing. It sold in 2005 for $654,000. So the loss taken on that home was pretty substantial. The average price per square foot in Morgan Hill for homes that sold was $283.31. So it's tough out there for some sellers. Now, moving forward, what does that tell us? Let's go ahead and see if we can get something out of the numbers over the past months, going all the way to July of 2007. We'll look at the trends here and see if we can't see where we're going to go in the upcoming months. Now, my personal feeling is that we are going to see all of these numbers continuing to go down. I don't really see winter as being the time when these prices are going to go up, particularly since the emphasis on homes that are getting sold tends to be at the lower end. But let's go ahead and take a look and see where we've been. Obviously, from month to month, we've seen an increase in average price. Now, that's pretty good news. We also saw an increase in the median. Now, the average home price, again, was $780,040. The percentage increase was 2.96. That was an increase of $22,427. So that's actually pretty respectable. Now, we reached our peak in June, and that was really the selling off of some higher-priced homes that had been on the market for a very long time. The median price change is actually up 8.63%, and that's a dollar increase of $55,600. And that basically tells us that some of the folks out there purchasing were buying homes at the higher end at a greater rate than they were in September. So if we look back at last year, do we get any good information from this? Well, last year we also saw an increase in October, but a much greater increase. But we also saw, and this is sort of the fortune-telling part of this slide, is we did see a decrease in average prices as we moved on into January, where things sort of hit the bottom. I suspect we're going to see the same thing this year. We may even see more dramatic drops. Now, it depends on a lot of this depends on the confidence of sellers of where they think the market's going. And, frankly, I don't know anyone who thinks that prices are, in the next 6 months anyway, are on their way up. No one that I've talked to, listened to, read, has indicated that they see any kind of a recovery as far as home prices are concerned happening in the next 6 months. And that's really about as far forward as I think you need to, as far as you can even vaguely try to estimate where we're going. So anyone who's trying to get their home sold, if you haven't had any luck yet, I don't think that the winter months are going to be kind to you. If you're hoping to get them sold in the winter months, I think that you seriously need to consider dropping your price. We probably will see a little bit of a boost in prices in February and March when people try to sort of coordinate what they see as a great market for buying with the usual time to move. And of course, the big increase usually happens in April and May, with escrows closing in June as folks go ahead and make their purchases while kids are out of school, that sort of thing. So what's my advice based on this slide to sellers? If you're looking to get this home sold in the next 6 months, you seriously need to drop your price. And that's really the only way you're going to see this thing move. If that's not a possibility for you, your next best hope really is the summer months of next year. There's really no rays of sunshine till then. All right, let's go ahead and take a look at the days to sell. That's obviously the next most important thing for most folks. And we'll look back at these numbers going all the way back to 1999. We can see that there's really a pretty dramatic increase. Once you hit 2005, every year after that, just a really profound increase in the days on market, going up to almost 110. Now, the days to sell for October of 2008 was 108. Now, that's 10 more days to get a home sold in October of 2008 than we were at October of 2007. That's a percentage increase of 10.2%. Now, the lowest days on the market was 5. The longest days on the market was 333. And as you know, I like to take a little bit of a closer look at these numbers because sometimes it can be misleading. And unfortunately, this month it really doesn't seem to be that misleading. It really is a fairly equal spread as far as it being, as far as the expectations that are set. In other words, we're not seeing these numbers skewed by just a couple of homes that were on the market forever. Now, granted, we did see this 330 days, which was statistically out there, but it wasn't out there all by itself. There were several other homes that sort of huddled up in that area as well. So to sort of break it down for you, let me give you sort of the day breakdown. 2 homes sold in the first 7 days. 4 homes sold in 8 to 30 days. 4 more homes sold in 31 to 60 days. 4 more homes sold in 61 to 90 days. 6 homes sold in 91 to 180 days. And 5 homes sold in 180 days or more. So what's the realistic number? Well, a lot of this is going to depend on your specific situation. I always suggest that you get a competent real estate professional out there to take a look at your home, do a market analysis, and see what sort of days on market they would guess based on the numbers that they're seeing. But I'd guess the average person out there is going to be looking at least at 90 days to get a home sold, unless you're in one of those cases where you're either because of price point, location, or features that you're just going to be one of those homes that's going to have to stay on the market for a really long time. But the bottom line is if everything else is in order, if your home has been on the market for 200 days, 110, 120 days, you need to change your price. That's really the primary mover here. Buyers are seeing you either virtually through the internet or driving by the home and just deciding it just isn't worth it based on the other homes they're seeing. And when it comes right down to it, that's what it's all about. If buyers just don't see the value based on the homes that you're competing with in the marketplace, you're never going to get that place sold. So give that some careful thought, and you're going to have to strategize a little bit more about how you're going to get that place moving. Now, the days to sell in past months, let's go ahead and take a look at these numbers and see if we can sort of get any intelligence from them to figure out where we're going. Now, the good news is we're seeing, again, a month that has performed in line with what we've seen historically. Now, from August to October of last year, we saw fairly steady decreases. From August to October of 2008, we again saw fairly steady decreases, with decreases continuing on through November. I wouldn't be surprised if we see that same sort of trend. And then a dramatic increase in December and January. That's normal. Those winter months, just not as many things are selling, and those things that do sell, it's just taking longer for them to get sold. I wouldn't be surprised if we see almost the exact same sort of downturn. I actually, last year or this year, March was the first month where we saw a big increase in the total number of days on market. That's a little misleading. I think what we might see is increases, but not because it's taking longer for homes to get sold, but because we're selling off inventory that's just been on for a really long time. It wouldn't surprise me if we see in February and March those numbers jump as some of this inventory gets flushed out. my feeling is that I'm getting a lot of inquiries from people about listings. I'm not getting a lot of people seriously going out and looking, but I'm seeing a lot of folks asking me about properties, trying to get projections and ideas on when the best time to buy is. And I think once you figure in the fact that a lot of buyers need to coordinate other things in their lives to get a move done, and with what the market's doing, I think we may see this upcoming summer come a little bit earlier and last a little bit longer and get a lot of homes sold based on the idea that folks aren't thinking that next year or in 2010 that the same situation is going to exist. So that's sort of my take. This is obviously just me sort of eyeballing the situation and sort of trying to figure out where I think things are going to go. Now, the days to sell between September and October actually down 17.56%. That's a 23-day change. So that's actually pretty good news. And again, I think we'll probably see the same decrease as we did last year. This year, I don't think the trends are going to go off. I'm not seeing any reason to estimate that these trends are going to go way off of the reservation as far as what they've done in the past. Now, I do appreciate you all taking the time to listen to what I have to say on these various markets. If you'd like to get in touch with me, if you'd like to see any of my other material on my website, you can find that at www.soldbyrobert.com. You'll find articles, podcasts that I do weekly, and all of my other YouTube videos are up there as well. Now, you can also get in touch with me via email at robert@soldbyrobert.com. If you have any ideas, observations, suggestions, or questions, please feel free to send them via email if that's your preferred way of getting in touch with me. You can also call me. You can dial 408-852-0525, and I'll be happy to discuss markets, the business in general, anything you'd like to talk about. If you're someone who prefers to chat online, you can find me on AOL Instant Messenger, Google Talk, and Yahoo IM using the screen name The Rebel Broker. And on Skype, I am screen name Rebel Broker. And finally, referrals are always appreciated. If you or anyone you know is interested in real estate in Silicon Valley, please feel free to give me a call. I'd be happy to help you with any real estate needs. But if you're someone outside of Santa Clara County or Silicon Valley, I can help you find the right agent for you no matter where you are in the United States. I can whittle out the folks who shouldn't be out there in the business and make sure that you are not giving your time, money, and effort to somebody who doesn't take the business as seriously as I do. So you can use any of the methods mentioned above to get in contact with me, and I'll be happy to refer you to an agent where you are interested in real estate. Thanks again, and I'll talk to you all next time.